ARK Invest, best stocks to buy now in 2021. Hello, it's with much pleasure that I welcome you once again to Stacking Stocks, where we bring you updated insights into the world of digital currencies and the stock market. The last year saw massive gains in the stock market, some being motivated by the outbreak of the COVID-19 pandemic. The existence of several platforms has seen most investors confused about which platforms to invest in. Today, we'll aim at providing you with prospects into the most viable ARK Invest stocks to buy and watch. Continue watching the video for more information, and don't forget to subscribe and hit the notification bell for further videos like this one. The ARK ETF concentrates on companies that apply the disruptive innovation approach in their operations. This approach changes the expensive and more refined services and products that were initially accessible to more skilled users and makes them more accessible and affordable to the broader population. On the company's website, the CEO of ARK Invest said, "Disruptive innovation is often not priced correctly by traditional investment strategies because people may not understand how big the ultimate opportunities will be. They aren't analyzing the opportunity, and they aren't analyzing the disruption." The ARK Innovation ETF rose more than 152% in 2020, thus beating the Nasdaq's robust 43.6% return. In 2021, the best ARK Invest stocks to buy and watch include Coinbase, DraftKings, Square, Teladoc Health, Tesla, and Zoom Video. Coinbase is a safe platform that enables one to easily buy, sell, and store digital currencies such as Ethereum, Bitcoin, etc. It's the largest cryptocurrency exchange platform in the United States. It was established in 2012, and Coinbase has received a positive growth with 43 million verified users in late December of 2020, and subsequently over 56 million verified users by the end of March this year, who are trading over $300 billion worth of cryptocurrencies in each quarter. Now, it also achieved an increase in revenue output and profits, and $730 to $800 million in profit, thus beating its record last year at $1.3 billion in revenue and $322 million in gains. Coinbase has the third highest volume of trade of all exchanges. On April 14th of 2021, Coinbase debuted and was valued at $250 a share. Its first day of trading valuation was at $328.28, up 31.3% for a valuation of $87.3 billion. Coinbase was valued at $86 billion in the landmark moment for cryptocurrencies around June. Let's take a look at DraftKings. This sports online platform enables the verified user to play online fantasy games and win cash prizes. On March 8, 2021, ARK Invest revealed a new state of 748,000 shares for the ARK ETF. A few days ago, the DraftKings stock rose by 3.5%, and on July 28, 2021, the DraftKings price was $50.64. The 24 analysts who offer a 12-month price forecast for DraftKings have an average target of $72.50, with a high estimation of $105 and a low estimation of $42.50. And that represents a 43.17% increase from the initial price. The current DraftKings sales value is $244.2 million, with a 3.85% rate on July 29, 2021. The analysts thus recommend that one should invest in DraftKings. Square is a digital payment and cryptocurrency leader. Recently, Square revealed a $170 million investment in Bitcoin, in addition to the $50 million purchased in October last year. Bitcoin forms almost 5% of Square's assets. It's currently developing a cup handle with a $254.88 buying point, and it's also in a buying range. On July 15, 2021, Square CEO Jack Dorsey, he tweeted stating that the company would establish a new business line that would enable the developers to develop financial service products concentrated in Bitcoin. The base of Square stock is still at its early stage, despite elevating over 700% from the COVID-19 bear market. A few weeks ago, Square closed a mainstream stake in the Tidal music streaming service called Jay-Z for $297 million in stock and cash. Brian Keane, a Deutsche Bank analyst, stated that Square was opting to invest $1 billion to $1.1 billion non-GAAP expenses of operation for this year. That represents a 50% year-over-year increase at the midpoint as investments across the Seller and Cash App ecosystems for future growth. In 2020, Square closed with $36 million Cash App users, increasing from 30 million users in 2019. It recently revealed that 3 million users traded Bitcoin in 2020 and subsequently, get this, 4 million in January 2021. As of July 28, 2021, the opening stock of Square was $254.03, with a high estimation of $259.87 and a low estimation of $250.77. It had a closing of $258.61 on the same day. Now moving on to Teladoc Health. Teladoc Health is a platform that provides on-demand healthcare services. Now, most medical officers, doctors, and patients prefer Teladoc due to the impacts of the COVID-19 pandemic. It's currently trading almost 50% off its 52-week high. After the company's earnings results, the shares jumped by over 11% before reducing losses to about 5%. On July 29, 2021, its pre-market value was $151.90, with an opening weight of $134.78. The daily ranges on the same day were $133.25 all the way to $152.29. The one everybody likes to hear about is Tesla. It's one of the leading ARK Invest stocks. It has a massive 10% weight in the ARK ETF set. Since 2008, after joining the manufacturing of electric cars, Tesla has beaten the odds and achieved several unexpected consequences. Further success is evident in their second quarter. Now, recently, Tesla faced challenges of chip shortage. However, the company still managed to double their revenue to $11.96 billion, which was above the $11.53 billion estimates. Further, their adjusted earnings rose by 230% to $1.45 a share. Recently, Tesla has decided to expand its manufacturing capabilities. The CEO, Elon Musk, plans to develop 20 million electric cars every year for a decade. This would be twice its current productions. Tesla plans to establish its third manufacturing plant near Berlin, and then the fourth one near Texas. Currently, the company is expecting a continuation of the production of Model S to increase throughout the year. The company has a relative strength of 79. The question of whether Tesla is currently a buy is quite debatable, though. The company's stock has almost constantly been 30% off its high records, despite the recent index records reaching a high. Now, the stock is seeking support from its significant 50-day and 200-day moving averages. When obtained, the support from these levels would be great for the company's prospects. And the last stock that we're going to look at is the Zoom video stock. Zoom is leading in modern video communications with a platform for video and audio conferencing and chats. In April 2019, it raised $752 million with shares valued at $36. This stock jumped by 72% on its first day of trading. Its relative strength line began to rise in January of 2020 before the outbreak of COVID-19. The improvement extended in February and soared significantly in March when the work-from-home system came into play. In April this year, the Zoom stock earnings rose by 560% to $1.32 a share from last year. Its revenue increased by 191% to $956.2 million from last year and rose by 8.3% from the January quarter. Now, further, Zoom reported that it had 1,999 users who contributed over $100,000 each during the sprawling 12 months by April 30th. Now, this data represents a 22% increase from the 1,644 users in the January quarter. Now, in the same way, Zoom's full-year fiscal 2022 revenue outlook increased by almost 6% to a range of $3.975 billion to $3.99 billion. The analysts had initially estimated 43% revenue growth to $3.8 billion versus a stifling 326% growth rate in the last year. On June 1st, Zoom revealed an adjusted PS of $1.32 on sales of $956.2 million, thus surpassing those estimates. Moreover, the earnings rose by 560%, while the sales increased by 191% compared to the previous year. The current quarter, which is set to close in July, has Zoom forecasting revenue of $987.5 million compared to the analyst estimates of $931.7 million. Zoom said that it expects an adjusted profit of close to $1.14 during the midpoints of its guidance compared to the forecast of 94 cents. This data indicates that Zoom could be a beneficial buy in the current year. Well, thanks for watching this video. Remember to subscribe, like, and share. See you next time right here on Stacking Stocks.